What's up, Internet? My name is Ian Bloom. Welcome to Nerd Finance. I'm your resident financial life planner and huge nerd. In today's episode, I am going to talk about something a little bit topical. You see, I want to cover the effects of a market value drop on a company that's publicly traded. And the reason that I want to cover this is because after E3, about a week ago, Nintendo saw a big drop in market value. They lost about $1 billion. And this is because their stock price dropped after some announcements that came out about a delayed Animal Crossing, Pokemon Sword and Shield maybe not having all the features that the fans want initially, those sorts of things. So how does a market value drop actually affect the company in its day-to-day operations? The answer is actually it really does not. You see, the only reason that companies initially issue stock is to get more money, to get more funding. And they do this in the form of what's called an initial public offering, where they sell their shares of stock to the public for whatever price the public will buy them at. But after that, most stock is not traded between the company and the public, it's traded between different members of the public. So the value of Nintendo's shares dropping really don't affect the day-to-day income of Nintendo. Now, on the long term, the value of its shares dropping will eventually affect Nintendo because there are shareholders who have invested in the company and want Nintendo to do well. So if those shareholders believe that Nintendo is making decisions against their best interests, they may do things like change the board of directors, fire the CEO, and bring somebody else new in who they think will serve their interests better, those sorts of things. But it's very reasonable to suspect that Nintendo has a long-term business strategy that involves things like keeping its employees happy and not forcing them to crunch time, in the case of Animal Crossing. Especially given the negative press that crunch time in the development world has gotten recently, I really can't blame them for this strategy, because in the short term it may hurt their market value and therefore piss off their shareholders a little bit, but in the long term, if Animal Crossing, Pokemon, and all these other games are great games and sell well and they sell some more Switches this holiday season, their investors will forget about that down period and they won't have to deal with the fallout of losing tons of employees because they force them to work crazy hours and not see their families at a particular time of year. As a result, I wanted to point this out because I think that, advertising outlets or media really love to latch on to market value drops as, oh, Nintendo's a disaster and they're losing money or something like that, but they don't really have the background to evaluate whether this affects Nintendo as a company very much, which it turns out it doesn't. So if you'd like some further content on this type of subject, or if you are looking for answers to a particular question you have related to your finances, feel free to subscribe to this channel or send me an email and I'm happy to help. Otherwise, I hope you enjoyed the video and I hope you have a wonderful day.